anyone in Switzerland can more or less go to the local tax office, and for about 50 Swiss francs, $55, I could ask what's my neighbor's income and wealth reported in any given year.
If you're not a citizen of the U.S. is the greatest place to invest in the world. You're not taxed on capital gains. You're not taxed on interest.
Where you move in Switzerland makes a big difference. If you're in Geneva or Vaud, your wealth taxes are really high. If you're in several of the other cantons, you may have a tax rate that's 15 times less. In Switzerland, if you file a tax return, somebody actually looks at it. Like everybody's tax return every year. It's not abnormal at all for people at 54, 55, 58 to suddenly find that they're not interesting anymore for their employer. I'd like to say it can be difficult as an American overseas investing, but I still have yet to find a situation where we can't find a solution.
Right. Welcome to another episode of Talking Expat Taxes. Today, I got Jonathan Lakowicz here with me, who is, he's actually, I know him through a group of tax professionals, international professionals that I'm in now, and he kind of is a jack of all trades, is kind of the way I would describe him from talking with him. He lives part-time in Switzerland, part-time in the U.S., does investment strategies, and knows a lot about taxes in the U.S. and in Switzerland. So we're going to pick his brain today about how it works in Switzerland, moving to Switzerland, things to look out for financially, tax-wise. But yeah, Jonathan, appreciate you bringing on. I'll let you introduce yourself a little bit and what you do, and then we can get into it.
Alex, thank you so much for having me today. It's a pleasure to talk with you again. And yeah, let me jump right in and give you a little bit about my background, which is a nice little niche in the industry that we work in financial services. So I am American by birth and additionally Swiss by choice, having put in over 20 some odd years living full-time in Switzerland. And correct, I split my time now between the US and Switzerland. I have companies in both locations, and we're specialized in doing financial planning and investment management for Americans overseas. We have several hundred clients living in Switzerland, many more in the US and elsewhere in the world. And as you know well, because of the US tax code, Americans overseas are pretty much unique in the rest of the world in the fact that they are taxed based not just on their residency, but also based on their citizenship. So with that, it seems to me, and I am not, if you will, a tax professional, even though I get mistaken for one often. I do like to read tax treaties and tax code, but this is much more to help people make good choices in their financial planning and investment management strategies. And so with that, I find it much more interesting to hang out with people like you so we can actually talk interesting details on how to make good choices for people. So when I started 19 years ago, I was living in Lausanne, Switzerland, had at the time one child, had 18 months of cash flow in the bank, and decided I was going to start a business competing with Swiss banks. I had no clients at the time, had just passed the CFP, and went out there trying to find people who needed help in financial planning. And it became obvious very quickly that Americans in Switzerland, where I had already lived and worked for a while, were facing challenges opening investment accounts, maintaining investments, dealing with tax issues. And this was well before the FATCA legislation that made things even more challenging. So I worked in large industry outside of the financial services sector for about 15 years, was educated mostly in the US, but did move to Switzerland in 1991 after graduating college. A few other things that I've done. I've written for the Wall Street Journal for a few years on expat finance, for a few other publications as well, have been interviewed here and there. And then one of the big things I do on the outside is the volunteer work for American citizens abroad. ACA was founded in Geneva, Switzerland over 40 years ago, but for over a decade, we've been based in Washington, D.C. And at ACA, we're nonpartisan, nonprofit, and our main role is to educate people in government, U.S. government, and Americans overseas about issues that they face, whether it be around citizenship, taxation, Social Security, or other matters. So we spend a lot of time talking with different constituencies in DC and elsewhere, trying to understand the problems of overseas Americans. And of course, taxation often comes up as one of the big pain points for overseas Americans. So fast forward now, 19 years after starting the business, we have employees in 5 different countries. We have clients in over 15. And one of the things you see in working with overseas Americans is even though they face the same tax code in the United States, where they happen to live and their circumstances make their situations often quite unique. So one of the bigger mistakes I see with people moving overseas, say in taxes, is saying, oh, I've worked with John Smith as my tax advisor for 15 years. My company's sending me overseas and he's going to keep doing my taxes. And meanwhile, one of my observations was one big mistake Americans overseas make is thinking their domestic CPA happens to know something about U.S. tax compliance for overseas Americans. And this is where people like you are so important in that, if your tax advisor has 3 overseas clients, you're probably not in the right place. If they specialize in working with overseas clients and they know what a Form 1116 is, and they know what a 5471 is, and they know what FBARs are, and they know all of these various forms that are impacted, they can help keep you out of trouble, which is, I think, the number one goal often as a U.S. taxpayer overseas.
Yeah, I was talking to a client this morning, and that's how I usually lay it out. I want to save people money and save people taxes, and that's definitely a goal. But number one goal is don't pay unnecessary penalties and file your tax returns correctly and make it simple. Most of the time, you're much better off having a simple structure than saving a dime with this overly complex thing that probably is not bulletproof. So that's my general strategy. I mean, it depends on the temperament and what the person's looking for. But yeah, I agree completely.
Indeed. So tell me, what else would you like to know about Switzerland or taxation? Or please let me
for sure. So, and I totally understand, you're not a Swiss tax expert, and so we can, well, I guess we'll caveat this to say, if you're moving to Switzerland and have real Swiss legal questions, you need to find an accountant in Switzerland that does this for a living.
And there's plenty, but I can cover some of the basic, I think, that might be interesting.
Yeah, and that's what I think we'll try to hit on is these practical aspects, not necessarily the deep technical parts of the Swiss tax law, but, if you're moving to Switzerland, what are like the basic things you need to think about at first? And one thing I'm curious about, Switzerland, I've kind of worked in individual tax and corporate tax through my career, and Switzerland is always post-FATCA. We can dive into that if we want, what that is and the impact there. But post-FATCA, it's still, Switzerland has this ideal as like some tax haven to Americans. And I mean, I guess, what is your opinion on that when people think inherently like they're going to save tax money by moving to Switzerland? Is that an appeal? Or moving to Switzerland?
Certainly for Americans overseas, no. I mean, there are certain types of taxes that can be beneficial, but for most people who are employees or retirees, you're going to find, depending where you move in Switzerland, the taxation can be very, very different. And tax haven, it's really historically, like many other jurisdictions, any country can be a tax haven, right? If you don't live there, oftentimes in the past, countries were not so interested in telling on their, depositors or other business that they did on a cross-border basis. Of course, a lot has changed, but I would say from a compliance standpoint, looking at what we have to go through in Switzerland, it's far more strict in terms of anti-money laundering regulations than in the United States. And even, a little fact about Switzerland, anyone in Switzerland can more or less go to the local tax office, and for about 50 Swiss francs, about $55, I could ask what's my neighbor's income and wealth reported in any given year.
Really?
So it's not all that secret either. So
Right.
people will do this for business partners or employees or
Yeah.
for a variety of reasons, but things are not quite as secretive and not quite as much of a tax haven. And in many cases, penalties for doing the wrong thing can be far more strict. Switzerland has a wealth tax as opposed to a capital gains tax in most cases.
Right.
And if the Swiss find that you have not reported a certain account or a certain asset, they'll go back 10 years with potential penalties and interest as well as the taxes due. Far more strict than, say, an overseas voluntary disclosure program or something along those lines.
Right. I got you.
So
Yeah, honestly, I tell a lot of my clients on the inbound side, the US, I find it to probably be the biggest tax haven in the world. With FATCA and the reporting requirement, all the other foreign countries have to tell the US about US citizens' bank accounts. But a foreign person, if you're not a citizen of the US is the greatest place to invest in the world. You're not taxed on capital gains. You're not taxed on interest. You don't have to tell your home country that you have the investment there. It's a pretty good deal.
Well, this is the ironic thing is in the OECD, you have what's called AEI or automatic exchange of information.
Right.
So let's say you have a French person living in France with an account in Switzerland. The Swiss bank is required to report income to the French government.
Right.
But this automatic exchange of information goes on with so many different countries today. This
Except the
happened
US.
post-FATCA, except the US.
Right.
But even the U.S., the FATCA agreements say that the U.S. is supposed to share information with other countries. It just seems it hasn't started yet.
Okay. Actually, I didn't know that. I thought it was totally one-sided. Maybe it's
No,
just
if you actually go into the agreements, I think it's whether the U.S. will share it seems to be held up somewhere in Congress or not, but it doesn't seem to be a high priority.
Right. Yeah, I can imagine.
So, but back to Switzerland. Like places like Geneva and the Canton of Vaud next to Geneva, where Lausanne is, the tax rates are generally considerably more expensive than the U.S. So one surprise for people is not only Switzerland a relatively expensive country to live in, if you're working and earning a good salary and have a bit of wealth, your tax rates can be considerably higher in the United States. And so if you're thinking of moving there, having a good understanding of not just that you're moving to Switzerland, but where in Switzerland. So Switzerland, their government structure is the most similar of Europe to the United States, meaning it's broken down between federal, canton or state, and commune, just like more or less we have in the U.S. where it's, country, federal, state, and local or municipal. Right. And so one big difference is the income tax at the federal level maxes out at about 12% in Switzerland, but the local cantonal rates can go up well over 30%. So, if you're self-employed in the Canton of Vaud, your top tax rate's around 52.5% or so. So it feels more Nordic or Scandinavian than it does a tax haven. Okay. But even as an employee, we have plenty of clients who have tax rates well into the 40% just on their income, and dividend income is included. It's not no special treatment there. And then on top of that, you have a wealth tax that can go up to, again, depending where you live, up to about 1% of income per year, of wealth per year.
And so if you move from the U.S., I'm not as familiar with the wealth tax there. So is that an annual tax, the 1%?
It is.
And is it worldwide assets or
worldwide wealth, except for real estate. So real estate is taxed differently, and foreign real estate will add to the total amount of wealth for the base rate that you pay, but you don't pay the wealth tax on foreign real estate.
Right.
And
this is where some double tax can come in. With that, because you're paying, let's say you move to Switzerland, you have a home in the US and you spend a few years in Switzerland to see if that's where you want to stay. And eventually you say, all right, I'm selling my house back in the US. We're staying in Switzerland. Well, you've been paying this wealth tax, presumably, and you're going to own that home each year. And then you sell the house in the US. The US is still going to tax it as a capital gain if you get outside of that principal residence, exclusion. And there's no credit for that. You can't credit that wealth tax against maybe, I mean, I don't know. I wouldn't think you could because it's not an income tax, but there's probably a
Real
debate
estate
there.
is treated a little differently in terms of wealth and income taxes. So the Swiss do charge a capital gains tax on
Okay.
home.
So in that scenario, you'd still pay tax again in Switzerland on the sale of that home.
Potentially, but not necessarily. But if you were talking about an investment account, the Swiss don't tax realized capital gains, but they do tax wealth.
That was where the example I was trying to say. Exactly.
So there is a mismatch, and the wealth tax is generally not seen as being able to use a foreign tax credit, though depending on the way the wealth is structured, you may be able to get a deduction on Schedule A. And so if 50% of your wealth is an income generating investment account, then you can generally deduct 50% of your wealth tax on a Schedule A to the extent it makes sense, right? If you're not in AMT and you have earned income, et cetera, so that the deduction actually matters.
Right. So if you're moving to Switzerland with wealth, with assets in the U.S., considerable assets, this is where it's going to turn into a coordination that you have to do between your U.S. tax advisors and planners and your local tax advisors and financial planners to see, how best to structure these assets. Is it worth putting it in some types of assets versus others, and making sure you're getting the most out of the foreign tax credit regime. In some cases, it may even be worth getting liquidating to get that step up in basis in some cases. I don't know.
Each situation is a bit different, and also where you move in Switzerland makes a big difference. If you're in Geneva or Vaud, your wealth taxes are really high. If you're in several of the other cantons like Zug or Schwyz or Nidwalden, you may have a tax rate that's 15 times less than in Vaud or Geneva.
So the wealth tax is federal, or it's a canton tax, or it's federal, but depends on the canton.
The joke about Switzerland always is, it depends, because each canton is quite different.
Yeah.
And even for tax advisors, most of the tax advisors we know, if they're in the German part of the country, they generally only work doing tax work in the German part of the country. And the French part of the country, the same thing. Estate planning is a little more universal, but income tax filing, you're almost always better off going with someone who is close to where you live in terms of the language group. Why? Well, Switzerland is quite provincial. The United States has 330 some odd million people. Switzerland has a bit over 8 million people. In Switzerland, if you file a tax return, somebody actually looks at it. Like everybody's tax return every year. And one of the things that you often see is when people first come to Switzerland, a tax advisor or then an employer will estimate the taxes. And there seem to be these large variations that come in a year and a half or 2 years later when they get around to actually assessing or looking at your situation. So the amount of times that we see people where their professional tax advisor is off a considerable amount, it's not small. And these big surprises tend to come up, and it's often to the detriment of the person having to pay. And in Switzerland, you get this final notice. So they come back and say, your 2022 tax year is completed. It is extraordinarily difficult to get a tax year reopened when that notice comes.
Okay. Yeah. So you don't amend a return or something.
Not easily.
So your suggestion in that case is when you come for a financial advisor, you're better off getting someone local to that canton or.
For the tax advice. And quite frankly, the Swiss tax returns are quite a bit easier than the US ones. And the Swiss tend to invest a lot in automation and simplification. So you can actually go to the website of any given canton, and almost all of them will have a tax calculator, including the federal government, so that you can get a pretty good estimate based on your situation. But where people start to not understand things is, I don't know, let's take a typical American example. You have kids, you have a few 529 accounts. You're like, oh, these are great. These are not taxable. Got a Roth IRA. no tax there. Well, in Switzerland, your 529s and your Roth IRAs are considered like normal investment accounts. They're taxable for wealth tax purposes and income tax purposes.
Okay. Yeah. So that's a great point. So let's back up real quick. What is the basics for, I'm an American, I'm moving to Switzerland. Let's say I got a job in Switzerland. I'm going to be employed there. When do I need to start filing tax returns, and what does that process look like?
Almost universally in Switzerland, we'll have people file their local Swiss return first. And once that's done, they start their U.S. return.
So it's a calendar year system.
It's a calendar year system. And most cantons, again, each one is a little different. Most of them, you get until March 31st to file your return.
Okay. So and are they filed separately, like U.S., federal, and state, or it's one return?
It's one return, and it all goes through the canton or the state, and they take care of distributing that generally. You get a separate tax bill that you pay for the federal or a tax bill for the canton and the commune, but your tax return essentially goes to your canton.
I see. Okay. And so you generally, would you, I know, like, for example, if you move to the UK and you're going to be employed in the UK, and you might have investments in the US, but you generally, you may not have to actually file a return if everything is withheld, through the system. Is that the same way in Switzerland?
Indeed. So generally speaking, in Switzerland, if you're at lower income levels, roughly speaking, 100,000 or less, you may only be taxed at source or withholding taxes on your income, and you may not be asked to file a tax return. If you're a higher income earner, odds are you're going to still have your tax withheld at source, but then you will be invited to file a tax return, in which case you may end up paying more or less. It starts to depend on what type of permit you have. The main workers' permits in Switzerland is a B permit. And there are several different other ones like an L and a D and things like that. But the main one that most people are getting for a full-time job where you transfer into Switzerland, it's often a B permit. If you've lived there for 5 years as an American and 10 years from some other countries, you can apply for what's called a C permit, which the tax differential is on a B permit. You generally have tax withheld at source from your employer, and on a C permit, you don't have any tax withheld. And sometimes people get way behind, and all of a sudden they file their tax return, and all of a sudden they have this huge payment they need to make. But when you're a Swiss citizen or a C permit holder, you're definitely filing the tax return and not having the tax.
And is that ever something you would try to do yourself in Switzerland?
What's that, tax return prep?
Filing your own tax return in a C permit.
We do have a fair number of people who've been there. They know the language and they have pretty easy to use software. And in Switzerland, again, you don't have that many levers that you can pull like on a U.S. return. So it is feasible. It's also generally much cheaper to have somebody do your Swiss tax return than your U.S.
Okay.
And it reminds me of another kind of common mistake is someone will come into Switzerland like, I got to give my Swiss tax advisor all this information, and then I'll have to give my U.S. tax advisor. I want to go find somebody that does both.
Right.
And I kind of compare that to, let's say you have a problem with your heart and you have a problem with your vision. Do you want to go to a cardiologist and an ophthalmologist, or do you want to go to a general physician who has studied everything? Right. If it's me, I want someone who is a bit specialized. And the firms that tend to do both, it's often like working with two firms. So I generally don't recommend trying to find someone just because it feels convenient, because in any case, it's often like working with two separate companies. I would say find someone, if you want to hire a Swiss tax advisor, who works with other expats, where the people speak English, if you don't speak French or German well, and where you're not. Well, really, this comes to any advisor. If you're working with an advisor where you're a typical client, that tends to be a reasonably good thing. If you're oh, wow, you're the only American we have,
Right.
you end up costing your advisor a lot more time, and the chances for mistakes are pretty high too.
Right. Yeah. No, I completely agree. I am also wary of the dual people, and I see it. The only places I really see it where it does kind of work is like in Canada and the UK. But that only works because those people only do that type of cross border thing. Like they're working for a US, there's enough US Canadian people to where they're only working with US Canada cross border as opposed to like US global people from Canada. But even then, like you said, it still kind of feels like you're working with two firms, even though like you're going to have two separate people, generally two teams working on it.
Rarely do I see that being a cost.
Right. Yeah. Yeah. I agree completely. Yeah. So I want to go back to what you mentioned with the investments, because I think that's a huge trap for people to watch out for. So when you're coming over to Switzerland, Switzerland is not necessarily respecting the pensions that you had in the US, and vice versa. The US is not necessarily respecting the pension treatment in Switzerland when you start investing in Swiss pensions. And the Swiss pension system is very complicated with the different, or for me it is at least, with the different, where they have different tiers.
Right. So let's cover a little bit retirement savings and investment. That's a good idea. So Switzerland's retirement savings system consists of generally of three pillars, which I like to call a table with three legs, because I think it's missing a leg. So the first pillar, or pillar one, is Social Security. Very similar to U.S. Social Security. In the U.S., we have Medicare as well. In Switzerland, you don't. One thing I will note is the U.S. Social Security is a lot more social than Swiss Social Security, especially for a non-working spouse or for a decedent spouse. Switzerland is not particularly generous to the non-working or less working spouse. So that's pillar one. Pillar two is similar to a 401k in the U.S. It is an employer pension plan, which is generally a savings vehicle with in most cases, a pretty conservative investment plan. So I like to say the second pillar is mandatory. Each company has a slightly different one that there have basic requirements in the system, and it's age-based. Oftentimes the employer contribution goes up from ages 35. It goes up where it starts at 25. It goes up at 35. It goes up again at 45 and again at 55.
Okay.
The kind of adverse effect of that is you see a fair number of large employers starting to try to push people out the door well before 65 because the pension costs become quite high. So it's not abnormal at all for people at 54, 55, 58 to suddenly find that they're not interesting anymore for their employer. So again, second pillar, a lot of times people do build up a pretty big savings amount. One of the challenges is, of course, this is not considered a qualified plan in the U.S. So most tax advisors, if they would do it, what I would consider more or less the correct way would be the employer and employee contribution into the second pillar is reported annually as taxable income in the U.S.
Right.
As well as any growth. Now, a lot of people say, oh, double taxation, this and that. Well, the plus side of it, especially if you track your U.S. tax basis in your Swiss corporate pension, your second pillar, is you can build up this big retirement asset that's already been taxed. And so in Switzerland, when you withdraw that second pillar, you get very favorable tax rates, like in the neighborhood of 5 to 12%, as opposed to the income tax rates, which are much higher. And that often makes a lot of sense.
In the U.S., you mean?
Yeah.
Yeah.
No, in Switzerland, in Switzerland, one of the big differences of the second pillar is where in the U.S., you might roll it over into an IRA account or start taking withdrawals and invest it. Yeah. Switzerland, you have to decide in retirement whether you take an annuity or whether you take a lump sum and manage it yourself.
Okay.
And if you take that lump sum, it's all taxable at the same time, but at a very low rate.
I see. and it's only taxable in the US, except that you've been, in your example, you've been paying tax on it, on the contributions and the growth as you go.
Exactly. And then the second pillar has a voluntary component, which we often recommend Americans not to do, because generally things that you do that reduce your Swiss taxes end up increasing your US taxes.
Voluntary meaning voluntary contributions?
Yes, exactly. So there's a statutory minimum amount that you have to contribute, but if you do more than that, it can often backfire in terms of it lowers Swiss taxes, but it only increases your US taxes at the same time.
And I'm curious what you think about this, because I just literally today gave a Form 3520 and 3520A presentation on foreign trusts and retirement plans. And, that's another component of this voluntary, because it's more complicated than this, but where you usually get is who contributed more, the employer or the employee. If it's the employee, you could have a grantor trust, and then you're looking through this thing, and and in my experience with Switzerland, at least, we don't know what's in this thing, and we need to know from a U.S. perspective, but Switzerland doesn't manage its accounts for the U.S., the IRS. And so that's a big part of this too, is figuring out, all right, who's contributing more or less to this? You even mentioned the employee starts contributing more as they get older, and this gets tripped along unexpectedly.
Right. So you brought up a good point, which is a second reason not to do voluntary contributions, especially if your employer contributions are the same as you, an employee, is the Grantor trust treatment.
Right.
Now, as you get older, oftentimes the employer contributions are a fair bit more, but these numbers are not easily available. So that Grantor trust treatment, it's like, I have yet to hear of anybody from the IRS trying to go track 25 years of pension contributions and demanding, that you prove that this is a Grantor trust or not.
That's been my experience. The IRS doesn't, there's a rule and it exists, but it's very gray, and the IRS doesn't want to touch it either.
Well,
and they don't know how to, and that's the annoying part about it. And really, a problem that we have from the IRS perspective is you have a rule that's unclear, and the IRS has refused to clarify it.
And this is a really good example, and I'm going to show my age, I think, a little compared to you, but back in the early 2000s, a lot of tax advisors in the U.S. are like, don't report your FBAR.
Right.
Nobody ever looks at them. If you go back and look at the stats in 2000, 2001, and 2, maybe the IRS is issuing 4 or 5 FBAR penalties a year.
Mm-hmm.
Okay, FATCA comes around, and the UBS case that drove a lot of the legislation, and all of a sudden, everything is compliance. All these people that weren't filing, and often with the blessing of their domestic tax advisor. And so one of the problems is you got all these rules on the book, and they might not have enforced them for 20 or 30 years, and all of a sudden some case comes up or some directive changes, and all of a sudden it's being enforced. And this is one of the problems, like with the Grantor trust issue on foreign pensions, is you just don't know. You have the same issue on, the estate taxes for non-Americans who don't live in a treaty country who invest in, say, Apple stock.
Right.
They don't get a $13 million exemption on their federal estate tax in the U.S. They get a $60,000 exemption. So if you're an investor in U.S. securities and you happen to be using a U.S. custodian, well, you pass away, that custodian's not going to release your funds until you get an IRS transfer certificate.
Yeah.
Now, if you happen to hold those shares in a non-U.S. institution, most of them, to my experience, don't enforce this, and they just, look at local probate documents and they pay out the account. So you have all these kind of hidden traps, and as a tax preparer, your hands are kind of tied, because when you know what the rules are, you got to tell your client, this is what you need to do. And what they need to do is often a lot more work for you and cost for them to comply. And they're like, why am I paying all this money and time? I don't even owe any taxes in the U.S. And so that cost of compliance is one of the biggest headaches for overseas Americans.
Yeah, for sure. And I'll say that I feel like, at least for the trust, that it's going and the momentum is going in the right direction. You know, this dealing with the ACA and seeing some of the things that are out there. I mean, that's looking a little bit more bigger picture, I think. But with the trust specifically, it's gone from very bad to better. I feel like they're starting to understand just for example, Canadian plans got exempted back in 2014 or whenever it was from these 3520 requirements. Why is Canada special for,
Well,
you know?
So I think this goes back to tax treaties, which are a horrible way to have to deal with the system. But the model treaty language exempts foreign pensions. But when treaties don't get updated for 10 or 20 or 30 or 40 years, you have all these, the UK treaty is a good one. The Canada one is a good one,
Right.
but the Swiss one needs some improvement. And
What year was the Swiss one?
the
do you
Swiss
recall?
one was renegotiated after FATCA around 2000. I want to say 13 or 14.
It's based on the 2006 model.
Well, except when they updated then, this was all about FATCA and they didn't fix the retirement issues.
Yeah.
Rumor has it that the Swiss US one is being negotiated again, but these are really slow processes. And, when you get certain people in Congress who like to hold these things up for no other reason than to hold them up, it's just a horrible way to have to try to deal with these issues. Yeah. So, just thinking another form out there, the 3520, when you receive a foreign gift or a foreign inheritance, there have been some pretty brutal automatic penalties coming out of those forms recently. We hear that that's lightening up a bit, but yeah, you have all these special requirements as an American overseas, and it can be a challenge.
Yeah. And I mean, it's just about working with people that are familiar with it. Cause it's definitely challenging. If somebody tells you it's easy and simple and you're their only client, I'd be very wary that it is so easy and simple.
Right. Well, and I would say there's two components. One is you as the tax preparer saying, listen, I've seen hundreds of international tax returns. I know what to look for. But the other is on the client side, knowing what to give you, right? The tax industry likes to prepare these organizers where everybody feels like they're doing their own tax return for the tax advisor. They're filling in all this information.
Right.
But you see a lot of times people just make mistakes.
Mhm.
Like we've had plenty of people, hey, listen, I was told in the U.S. Embassy in 1987 that I didn't have to file a U.S. tax return if I only had Swiss income. So for the last 35 years, I've been a school teacher and I haven't been filing in the U.S.
Yeah. I hear that story once a week.
Exactly. So now the IRS, depending on the administration and the mood, sometimes it seems they look at everyone overseas as a criminal first, and you have to prove you're innocent.
Right.
And at other times, you get people that are much more reasonable and are like, okay, we accept that this was willful accept that it was non-willful. They didn't mean to make all the mistakes. And, this is the challenge. And there's a lot of Americans out there that didn't grow up in the United States and they don't know the tax culture. Like when I first spoke with people from the IRS, when I moved back to the US, over 15 years ago, they'd be like, well, how can Americans not know that they have to file a tax return? And it's like, well, if your parents are American and you were born in France, or maybe they're not even American, but you were born in the United States and when you were 3, they moved overseas.
Mhm.
How were you supposed to know? IRS is not sending you a postcard as an American citizen saying, happy 18th birthday, now you have a tax burden. So it's not unrealistic that people don't understand the filing required.
Yeah. No, I see it all the time. And that's why, I mean, not to go down another rabbit hole, but they have the amnesty and the streamlined filings, and they've been out there for my whole career, basically. I keep thinking they're going to go away, but I think that's why they don't, it's because, I don't know, they will eventually, but, there are still a lot of people out there that it's reasonable to believe that how would they know they have this filing requirement? And the IRS wants them back in the system, obviously.
Well, the strange thing is, if you look at the overseas American population, just like in the U.S., a huge percentage of overseas Americans don't end up owing any taxes. And one of the things we work at on the ACA is trying to make the system more fair, but also it would be a big burden lifted off of the IRS not to deal with millions of tax returns that generate no revenue.
Yeah, I completely agree.
It seems like
it's not just a tax savings; it's also a compliance burden on both sides. The IRS, the 3520s alone, like I can't imagine the hours spent responding to notices, and I don't know whoever it was burning my notices out in the back garage. That guy was taking a lot of time too, but yeah, no, I mean, I agree. It's not necessarily, I mean, a lot of what you're doing at ACA or what the group's doing at ACA is figuring out how do you score this thing? Because really, not taxing citizens abroad is not really this big loss of revenue that you might think just naturally. I mean, it may actually be the efficiency gained could actually gain the IRS if you take it on net. You know?
So ACA has spent a fair bit of time researching and getting scored the costs of different levers that first came out in a bill back from Representative Holding. ACA's involvement in this has been very much behind the scenes, but really some of the research that we did into this, we actually, I don't know if you recall, but the U.S. government used to come out and say that there's, about 9.5 million Americans overseas.
That's the number that's always stuck in my head, but I was corrected on that recently.
By Mary Louise, I'm sure. And because of that, we actually went and tried to find the source of this number. And the IRS would come in and say, well, there's this huge gap of overseas Americans not filing because we're only getting a few million tax returns. Well, it turned out that nobody really went and counted the overseas Americans. And when we actually started looking at it, the number of overseas Americans was closer to 4.5 to 5 million. Right. And it seems that the quote non-compliance from overseas is about the same as about the non-compliance from inside of the United States. So that in itself was an issue that wasn't an issue.
Right. Yeah. They're using twice the number to score the revenue loss from it, and probably doing that part wrong anyway, but they're still using twice the number.
It's the foreign earned income exclusion. What we're aiming for is, a system whereby, it has to be tight on abuse. You can't have people like moving overseas for 6 months, realizing a bunch of income and then coming back in the U.S. and lost that way. So the system has to be fair to the United States. It has to be fair to the overseas population. It has to be fair to these, what are called accidental Americans who have never lived in the U.S. or were there as a young child and went out. And so we have a lot of momentum right now in Washington for bipartisan support of legislation to improve the lot for overseas Americans, but there's a lot going on in Washington right now. So we just hope that it gets the appropriate amount of attention in Congress.
Yeah, no, it's hard to keep up with. We'll see what happens this year. Yeah, we got a few minutes left. I want to make sure we talk about more what you do in Switzerland particularly, but, with Americans and investments, because the tax side and with Europe in general, I'll just say Europe in general and Switzerland, what we're doing or what I'm doing from a tax perspective is just making sure you're not paying tax on your income in both places. You're probably going to end up paying the higher rate in Switzerland. That's the end result, but you're not going to be paying tax in the U.S. The bigger strategy and problem, I don't know if problem's the right word, but strategy that needs to be looked at is how you invest your money. I have a lot of clients that move abroad and their financial institution in the U.S. kicks them out when they send them their U.S. address. So that's where you come in and help these people spend.
Right.
These people invest their money.
It's funny because a lot of institutions in the U.S. or outside of the U.S. will use, you live in this country, we can't work it with you as an excuse.
Right.
And sometimes it's legitimate. And sometimes it's the compliance department that says, we don't want to deal with people outside of the United States, or we don't want to deal with people who live in these jurisdictions, and they have their reasons for it.
Then you tell them I have $100 million. You're like, wait a second. Oh, did you say Switzerland?
Yeah, actually, well, the funny thing is that there are a number of U.S. institutions where their procedures are the same, we can't work with Americans living in Switzerland, but if the numbers are big enough, a lot of institutions find a degree of flexibility. Now,
Yeah.
that being said, it can be tough because we've seen U.S. institutions like mail people a check from their IRA account and say, sorry, we're not working with you anymore. And you've
Right.
got 60 days to get that redeposited or you're in big trouble.
Right.
So certainly one of the challenges is which U.S. brokerage firm will work with people in a given country. So for example, Charles Schwab has a list of countries that you can see on their website that says, if you live in this country, you can keep an account open, say Switzerland. If you move to France, you can keep your accounts, but you can't open new ones.
Okay.
If you move to Italy, you can't keep your accounts at all. Whereas Interactive Brokers or Pershing or others will have different rules for different countries. So one of the key things that you're looking at is, will my financial institution just hold in custody my accounts when I go overseas? The next level is, if you work with an advisor, will my advisor work with me going overseas?
Okay.
Each jurisdiction.
On the first part too, just before you move on from it, that can change.
Oh, yes, that's right.
Yeah, because it's on the website today, next year that might change, and all of a sudden you're out.
Well, absolutely. So that becomes a big challenge for, our clients, for firms like ours, which is, thankfully, we've worked with custodians that have been pretty stable. But when we get a client that says, oh, we're moving from country A to country B, one of the first things we're doing is checking with the custodian and seeing, okay, can they still work with this custodian? And that becomes an issue. One of the things we check as advisors, are we allowed to work with clients in a given jurisdiction? So for example, I don't work with clients in Canada because I don't want to go through the registration process in each province just because I happen to have one client in Quebec or one client in Saskatchewan or wherever. And so a lot of countries will allow an advisor to work as long as they're not soliciting business on a cross-border basis. Other jurisdictions like Switzerland get a lot more strict and have done in the last few years, where if you're not registered in Switzerland, you may well be, as an advisor, breaking the law. So as a client, whether you're doing it yourself or working with an advisor, that compliance issue is something that you're facing that you rarely face when you're a domestic client in the U.S. But
So if I have $2 million split between a 401k and a traditional IRA, and I'm moving to Switzerland and my money's with Schwab or
no problem.
Yeah. Or so if it's with Schwab, it's no problem.
Mostly no problem, except once you move overseas and they know it, they won't let you buy mutual. They'll restrict you to individual stocks and ETFs because mutual fund distribution is regulated differently than ETFs and individual stocks.
Right. And I'll be honest, I kind of cheat, and I don't think this is the right advice to give necessarily, but what I generally tell people before I knew you and knew you existed, find a U.S. address, use your mom's address, go to get a stable account, whatever you got to do, keep your U.S. address and move to Switzerland.
So here are the problems we've seen with that.
Okay.
One is a lot of these brokerage firms track those things. Like if they have mail returned or they see a change of address, even if they know we've seen just domestic clients in the U.S., kid moves to college and, the brokerage firm comes and says, you don't live at this address anymore with mom and dad. So the brokerage firms have a fair bit of ability to find out if someone really lives at a certain address. So if they find, oh, Alex, you're living in Iran, and we know that because even though you use your U.S. phone number, our phone software says you're calling in from there, you might find your accounts closed rather quickly. One is the brokerage firms do have the resources to figure this stuff out.
Right.
Sometimes they enforce it, sometimes they don't.
Okay. So you might think you're being clever, but most likely they already know and they have just chosen not to do anything about it.
Let's say your client's in California and they're moving to Switzerland and they decide to use their Uncle Bob's address in LA. where do the 1099s get sent to? They get sent to the client. They also get sent to the state of California. So all of a sudden, the state of California is coming and saying, where's your state tax return?
Right.
We have all this investment income. You're using the California address. Prove to us that you don't live here.
Right.
So we see state tax issues with using that address. Or you see, okay, Uncle Bob he's sick of California. He decides to move to Las Vegas. And he says, you know what? I don't want to receive your mail anymore.
Right.
And so, that can be a temporary thing, but it has its pitfalls. And if I'm in a financial institution and I'm in the compliance department and I find that my clients are lying to me, how much am I going to want to help them if I suddenly find out? So definitely we see brokerage firms have their clients lie about their address. That has a degree of risk. Now, okay, if you're going overseas for 6 months or 12 months, maybe not going to be much of an issue. But if you find yourself 4 years later or 5 years later still using a U.S. address, in most places, there's ways that you can comply and get around. And, I'd like to say it can be difficult as an American overseas investing, but I still have yet to find a situation where we can't find a solution.
Right.
And, sometimes you have to be persistent. Sometimes you have to be creative. And this goes for people who are do-it-yourselfers or working with an advisor. A lot of times, people in the advisory industry don't want to lose a client, so they tend to look the other way or turn a blind eye. I think that can be dangerous practice.
Yeah, for sure. So, I'll just throw a plug for ACA too. One thing that I do with that is I always forget the name of the state direct, the bank system you can use through.
Oh, the State Department Federal Credit Union.
Get a membership.
Yeah. If you sign up for 1 year for ACA, it's only $70 and it goes to fund the general operating expenses of ACA. But ACA members can open a State Department Federal Credit Union account. It's not a government account. It's just the name of the credit union because they started serving State Department employees a long time ago. But yes, any member of ACA can join the State Department Federal Credit Union. So as a place of last resort to get a U.S. checking account, to get a U.S. credit card, even to get car loans for your car overseas, the State Department Federal Credit Union has some great services, and we're happy to be part.
Yeah. So, the moral of that story is basically that if you're going overseas short term and you can use a address in the U.S., you're probably okay doing that, whether it's your uncle's address or whatever. But if it's longer term, you want to make sure that you're with a financial institution that you're okay in that country. And if so, you're probably okay and you can be open and honest with your bank and just hope that doesn't change. But it's good to know there are options out there for people with firms like yours that work with expats directly. You don't have to be with Schwab, you can find a place and there's a solution for you that we can help you find.
Almost always you can find a solution. And, there are more and more firms popping up that, are working in this expat place. I still consider ourselves pretty small. We manage something around 800 million or so, but we work with normal, ordinary people trying to help them make good choices in their financial planning and investment management. Every day is different when you work in this cross-border world.
Yeah, for sure. Yeah. Well, hey, Jonathan, it's been great talking to you. I've definitely learned a lot about the Swiss system that I didn't know before, and I hope everybody found that valuable. How can people get in touch with you if they have questions or want to work with you?
Well, as far as I know, I'm the only Jonathan Lakowicz on the internet. So Google search is how a lot of people, or the name of our company is White Lighthouse Investment Management. So pretty easy to find online. There's lots of free articles on our website and presentations as well that people can browse through. And we get a lot of contacts every week. We try to see if we're a good fit for people, and if we're a good fit and it makes sense, we're always happy to try to work with people and help them.
All right. Awesome. Yeah. And you know how to get in touch with me. You can find me at McGowanTax.com or check out some of my YouTube videos for just some free information out there at McGowan Tax on YouTube. But thanks for listening, everybody. Thanks for coming on, Jonathan. Hope we get you on again soon and we can dive in a little deeper to some of these investment options and some of the Swiss tax things.
That'd be great, Alex. So yeah, let's plan to do this sometime again. Maybe we'll do one focused on just investments for overseas Americans, something with fine.
Yeah, that sounds great. All right.
Okay.
Sounds
Good luck with your softball.
Hey, see ya.